Hello and welcome everyone to Silver Asset of the Day for Friday the 26th of February 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we get towards the end of the week here, what do you need to know? This week has been a great example of an opportunity to bank a lot of profits. Normally as you get towards the end of the month, you do see rebalancing of portfolios. It's very typical to see banking of profits. This can create liquidation events. We've seen that today on the S&P 500. We've seen it on palladium, on gold, on silver, on a number of commodities, including energies as well. And we have basically taken the opportunity over the course of this week to lock in a lot of profit here. Today, in fact, we banked a windfall amount of profit with palladium with our members at the Gold and Silver Club. We banked 10,950 points profit over 4 positions. So essentially for every 10 lots that you would be trading, that's over $1 million of profit. For every 1 lot that you would be trading, that's over $100,000 of profit. And that is just on our palladium positions. Earlier on this week, we banked 3,000 points on our energy trades. As you know, energy prices, they're broken out to 18-month highs over this week, and we also banked 800 points on Monday on gold. So really, we've taken the opportunity on the fast breakouts that we saw at the beginning of the week, which peaked around the middle of the week, to lock in a lot of profit before you get that end of month profit taking kick in, which is where typically as traders move into cash, this will propel the dollar higher. We talked you through that on Tuesday's Gold Asset of the Day, that look out for it. At the end of the week, you have the potential with the dollar being very sticky around that 90 to 89 level to get a bid later on in the week as traders take profit at the end of the month. That can create some liquidation events, and essentially you want to be aware of that, because that can, number one, be a great opportunity to bank profits, and number two, once the dust has settled, you can look to reload at much more favorable prices. Then as we move into next week, on Friday, we've got non-farm payroll data, and of course next week on Monday, it's Monday the 1st of March. New month, new capital flows, new opportunities. So then if you have a look at silver right now, silver is still holding above 27 US dollars per ounce. It had an attempt at the beginning of the week to break above $28 per ounce. That was still met with resistance, but we are still consolidating with silver here. Gold prices, they've been lagging. Platinum prices at the beginning of the week, they broke out towards 6.5-year highs again. They've been more robust, but again, towards the end of February, it's very common to see liquidation events on the metals, which is why we made sure that we booked profits at the beginning of the week. As we mentioned before, make sure that you're regularly banking profits in the market. Gold, from last Friday's low to Tuesday's high, it rallied 550 points. Make sure you lock in profits regularly, and this will give you opportunity to buy back at lower prices. It really is a trader's market. It's not buy and hold right now. Regularly locking in those profits is the best thing that you can do in the markets at the moment. And of course, bull markets, they don't go up in a straight line. They do tend to zigzag. So you need to make sure, again, that you are just being nimble, that you're not FOMOing in at the highs. This is where many traders, using outdated technical strategies, they keep getting trapped, buying too high, then they get liquidated, especially over the last few days. A lot of the narratives around silver, the silver squeeze and so forth, has got a lot of traders ultra bullish, only to end up just buying the top right, buying at 28, for example. But this is where you want to avoid gimmicky technical indicators. You want to make sure that you're not trading these outdated technical analysis strategies, which are taught to most retail traders. You need a lot more edge than that. Commodities is a zero-sum game. So essentially, the majority of the time, it is the banks, hedge funds, money managers, institutions that are making money. Retail traders, they're losing the money. There always needs to be someone on the other side of your trade. So if you're winning, there is someone losing. And if you're losing, there is someone winning. Majority of the time, it is the professionals that make all the money and the retail traders lose all the money. We want to change that for you so that you're not getting chopped up in the market. It can be death by 1,000 cuts sometimes. Panic selling out the lows and buying too high, which is where you want to be utilizing the research-driven approach in the market, using market intelligence, data, macroeconomics. Alongside that, the daily, the monthly, the weekly, quarterly, yearly cycles for commodities, the seasonal plays, capital flows, understanding key areas of liquidity, especially when it comes to the commodity markets. It's just as important to know when to bank your profits when it's time to come out of a trade as it is to know when to get into a trade as well. Utilize the intermarket correlations, the ratios in the market, and the knowledge and understanding of what the hedge funds, the money managers, the banks and institutions are doing in the market. This will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to become a member of the Gold and Silver Club.